What is up, everybody? Welcome back to another episode of the Dentists Who Invest podcast. We welcome, I beg your pardon, Zaid Esmail. Zaid is a returning guest, so a familiar face on the Dentists Who Invest podcast, and Zaid is here today to talk about something that we touched upon last time, but we're going to flesh out in more detail tonight, and that is day trading. How are you tonight, Zaid?
Yeah, very well, thanks, James. Glad to be back on. Thank you for having me back on again.
Dude, my pleasure. Your last few episodes got a lot of love, and I'm sure this episode will be no different. So, Zaid, day trading is something that people talk about, and it looks like something incredibly lucrative, particularly for those who are new to trading, because they believe that that is where the money's at. The quick trading, the fast trading, the sexy gains, all of that stuff. Can you tell us what day trading is, how it works, and whether or not it fits or it can fit in us dentist lifestyle? Let's start off with what it is, first of all.
Yeah, so essentially day trading is you are in and out of stocks within a day, so you don't hold anything overnight. So since we last spoke, I was doing kind of more swing trades at that point then, and I think because of the market conditions weren't great, it was quite hard to find actual swing trades. And my personality, my own point of view, I'm quite impatient. So I was either getting in too early or out too early with some of the swing trades, and that's when I kind of started to look at day trading. And actually, from my own point of view, it suits me more of my own personality because I'm not patient enough to wait for the things to kind of happen. And I think that's quite important with trading. It's kind of finding something that fits your own personality. So for me, what I quite liked about the day trading was that there was nothing to worry about overnight. So you're not going to get big gap ups or gap downs. You don't have to worry about timing your trades around kind of earnings and sort of dividends and other kind of news that can happen. And the other thing from saying that the sexy kind of low hanging fruit, I think cumulative gains are quite good. So if you think any index fund, you'll get 10% a year. If you break that down to actually per day, you only really need to be making 1% a day, if that, on average, and you're going to smash that 10% a year. So I think if you kind of see it from that point of view, yes, it's lucrative because you're accumulating on a daily basis. I think seeing it as a get rich quick scheme, I think is where a lot of people get into trouble from it. So I kind of got into it by doing a lot of reading, a lot of research, and I kind of try and show you my kind of journey of how I managed to get through and how I try and incorporate it into while still being a sort of a full-time orthodontist. So firstly, what things that you kind of need for it, you need a decent broker. You need a broker with live data. That's the key thing. That's where you can't do it on Hargreaves Lansdown. We have to be able to get in and out of trades really quickly. And the type of broker that you need is partly dependent on the type of strategy you're going to have. We'll touch up a little bit on strategy later on, but you've got different brokers with different fees. If you're going to be doing lots of trades in a day, and one method of strategy might be something called scalping, where you take lots of little gains. You take $50 there, $50 here, $50 there, in tens or hundreds of trades throughout the day. You're going to want a broker with no fees, for example. If you're doing a lot of shorting, then you're going to want a broker that has that can locate those shorts for you, and preferably has low locate fees as well. So the kind of broker, I'm sure I'm going to get lots of emails saying, "Oh, what broker do you use? What do you use?" I think it really comes down to the strategy that you're going to incorporate. The other thing you're going to need is you're going to need a screener. You're going to need to find something that you're going to be able to find the stocks that are going to be in play for you. And again, the type of screener that you're going to be looking for is depending on the type of strategy that you're going to kind of entail. And in a decent charting software, and somewhere that, again, you can get down to kind of 1 minute or 5 minute candles to kind of see what's actually happening with the price action. The other thing that suits me from day trading, which I quite like doing it, I was never a fundamental kind of analysis type of guy. That all those things kind of went over my head, but I do like looking at patterns, do like looking at charts, and day trading, a lot of it is really related to the actual price action. So it's more of kind of for the technical analysis part of me, which I enjoy. And then when you kind of come on to strategy, really, it almost doesn't matter what type of strategy you have. I think we briefly touched upon this on the last podcast. It's really down to managing what type of strategy you're going to have and then what your risk and reward is going to be for that strategy. Now, if you're going to be someone who does lots of trades throughout the day, your risk and reward ratio might be much lower. Your risk and reward ratio might be 2 to 1, but you've got a 70% win rate because you're doing lots of little trades. Well, if you're someone who's only doing 1 or 2 trades a day, looking for that breakout that might happen or a short squeeze that might happen, your risk reward might be something like 7 or 8 to 1, but you're going to get a 25 or 20% win rate, or that trade doesn't come about that often. So it's, again, trying to work out what suits you, what suits your personality. And there's loads of different strategies out there. There's kind of mean reversion strategies, looking for breakouts, following trends. You can even just trade within a range. If a stock throughout the day is always traded at the lowest at 20 and the highest at 30, you can almost kind of bounce off those resistance lines, and there's money to be made that way. So it's kind of finding what suits you, and then the biggest thing down to it is obviously there's pattern recognition. It's reading a lot of books on technical analysis, charting, reading the candles, and then doing whatever you can to try and find your edge and to find your way that that kind of suits you. And a lot of it may just be hours and hours of just looking on charting softwares, different charts throughout the day, or charts in play. Essentially, the real thing that you really need, no matter what, is you want something that has a lot of volume happening that day. You want something that has a lot of liquidity for you to be able to get in and out of the trades that you need. And if you are going to look into it and are going to kind of try and find the different strategies, there's lots of different information out there on following different people on Twitter, there are some YouTube kind of videos on there, but I would kind of take some of them with a pinch of salt. But it's kind of finding something that interests you, and then kind of before you have any money in an account, or start with a very small account, is trying to find it. Okay, right, what would I do today? You can look at the chart and go, okay, well, I think it's going to go up here, it's going to go down, and a lot of practice. And I think we spoke about another part of it, that this whole concept of 10,000 hours trading is absolutely no different. And by all means, I'm not there yet. For me, my kind of trading sort of career is only just really starting. And what I'm hoping to get out of it at the minute is, in the first kind of year, is actually not to gain money, but not to lose money, but to gain experience. And put my 10,000 hours that way. And then once I've got to the point where I'm not just profitable, but consistently profitable, and having your losses not blowing out your accounts and chasing trades, then I can put more money into it, and then potentially have it as a second income stream, or as an alternative to dentistry. As you never know what will happen in life. Obviously, you did podcasts on kind of second careers in that. So yeah, so I think the key thing is finding a strategy, finding an edge. Whenever you talk about trading, they always talk about an edge, and it doesn't have to be a big edge. It's, there's absolutely no reason why you can't trade the smallest of things day in, day out, going forward. And it's just giving you that, and it's not being greedy with it. It's not expecting to get, doubling your money every day. It's, if you've got a $10,000 account and you make, even $100 a day, that's still going to be more than 10% throughout the year. But so it's kind of just really important just to kind of find your edge and your strategy, and kind of try and stick to it. And even if you can kind of find a strategy where you might be kind of long in one strategy, and then you for a really good bull run, and then having a backup strategy where you might be doing a bit more shorting for when you're in a bit of a bear market, and trying to kind of work out what it is that you like to do. So from my point of view, one of the things that I quite like to do, there's two things I kind of look at. Really, I look at stocks that have very overly inflated, that have kind of gone parabolic within a space of 10, 15 minutes, half an hour, and then really stressed from the mean. And there's usually a pullback that happens after that. And I look at kind of shorting the pullback and potentially fading. These stocks tend to kind of fade throughout the day, and holding onto that short. And and kind of making money on the way down. And then when I'm looking at stocks that are going long, I'm looking at stocks that are breaking out of their patterns. So a lot of stocks that are going up throughout the day, if you look at the chart, they never just go straight up. It's almost like a stepping stone. They kind of go up for a bit, they go sideways for a bit, and then they go up for the next bit, and so on. And it's trying to work out, okay, well, when will that next step happen? And so those are the two things that I like to look at. And even though, you know, it doesn't have to be done throughout the whole day. Yes, it's day trading, but it doesn't. You can do it for an hour. You can do it for 2 hours. A lot of times, I'm trying to kind of find my trades in the first hour, 2 hours of the market opening, and that's when I've got patience, since the New York Stock Exchange opens at 2:30 GMT time, and I spend usually the first hour trying to find what stocks are in play and which are the ones that have made that parabolic move, and then try and get on the top side of that and short it going down. And that can quite easily be done in between patients. So that's one way of kind of fitting it in. But the stock market doesn't close till 9:30. 9 o'clock GMT time. So you've got time to kind of in the evening. In the last hour, about now actually, between 8 and 9 is the power hour, which a lot of volatility, a lot of price changes and movements happen. So again, choosing your time and choosing, your edge may only work at a certain point during the day. So it's kind of finding out what it is the edge that you have, and find something that you kind of believe in to get you there.
Yeah, absolutely. It's horses for courses, And when I said earlier, when I referred to the fact that day trading is the exciting thing that people tend to lunge at whenever they think they have to get into the investing or trading world, I actually think is massively helpful to learn the principles, the fundamentals of money, understand how that works, understand how to be an investor before you understand how to be a trader. And for anybody who is curious what that distinction is, an investor is someone who buys and they hold indefinitely, and they withdraw, they take profit out whenever they reach the age where they want to retire or they become financially free. A trader, if anybody takes profit before that point, you're a trader. Now, granted, there's a spectrum. Some people will trade very quickly. Some people will trade over the course of a few days or a few weeks. Some people will trade over the course of a month or a few years, but you're still under that bracket, the trader, And for anybody who wants to get into this route, go down this path of trading, it helped me so much in my understanding, my patience, and my mental state being a trader when I began to understand the principles of money in the first place. And there's no quick path to success, just like what you were saying there, Zaid. It's about putting the hours in. It's like anything in life. It's like dentistry. The best dentists spend hours. They have a passion for it. They study, they study. Anything like that in life is anything that that there is a huge scope to become good at in life. That's the case, and trading is no exception, just like dentistry. And that's the best way I can put it. And it's best to not try to run before you can walk.
Yeah, definitely. And these kind of concepts of any trading book will give you that, and it can be applied to anything. It could be applied to ETFs, it could be applied to equities, it could be applied to options trading, it could be applied to crypto, it could be applied to anything. And it's kind of having the same concepts and being repeatable and almost being like a robot. And I think one of the things that helped me when I was doing my trading is the money that I put into it was actually, I got quite lucky with some crypto gains this year, and I liquidated some of my crypto gains and used that money. So for me, it wasn't money I kind of earned from working hard. Essentially, it was that money and it's not money to me. It's points in the game. I think when you become emotionally attached to the money, when you start trading for money that you need to live on, your emotions kind of get the better of you, and then you can't make those decisions. You if you think, I've lost $1,000 today, and you think, what could I have spent that $1,000 on?
Yeah,
you've almost got to
eat.
Yeah, you've got to just go, actually, no, it's not $1,000, it's 1,000 points.
I like that. I've never heard that before.
Yeah, I think just kind of just see it as points on the game, a high score sort of thing, as opposed to kind of emotionally attaching yourself to that money that you could have spent on something else. So I think we're lucky in a position that we've got a good job. You know, we're not doing it to solely rely on earnings. You know, it's not like I've got to make money today because I've got to pay my bills through day trading. I think that gives us a bit of an edge from that point of view. But I think that's quite important. When you start doing it for money that you need to live on, I think it becomes different. And that's why when you talk to a lot of traders at the start, they say, oh, if you're going to learn, do paper trading, because that's the best way to kind of learn what happens. But with paper trading, it's because it's not money, it's just numbers on a computer. You don't have that same emotional attachment to it, and therefore people always make money on paper trading, but as soon as they have real money on the line, they end up not being as successful. So it's kind of trying to kind of bring yourself away from that. And every great trader that you ever hear talking about, they all went through a phase when they first started of blowing up their accounts, you know, once or even twice sometimes. So
yeah,
traders have done that. So using that as a kind of a learning tool and realizing it, you almost can't be a good trader until you've done that, until you've had that big loss.
rite of passage.
Yeah,
That happened
exactly.
to me. That happened to me at the start as well.
Yeah, and it happened. Well, it happened to me at the start, but I kind of broke the rules and I got very, very lucky. So I was on a trade that I was shorting. So it went high of the day and I shorted it, but I kind of, looking back, it was actually consolidating to a breakout. For me, it kind of reached high of the day and it failed to get there second time round. So I shorted it and then it just took off and it went parabolic. And I started to make a bit of money from shorting, and then I increased my position size, so I could start making some more money now, and I did it, and it just went absolutely the wrong way that I wanted it to, and I broke all the rules. I doubled down, and then it kept on going up, and then I left it overnight, and thankfully this was just before Thanksgiving. So everything before Thanksgiving was going up. Thanksgiving, obviously, the market was shut. And on Friday, I kind of held on to it and it just absolutely tanked and it just went straight back down. So that making my money back and everything else. But that taught me a lesson. So I got very lucky from it, but it taught me a lesson of actually, you can't get that lucky every time. And but if it kept on going the other way, and you kind of just leave it in there. You think you see that number as a minus red figure of whatever it is down, and you feel like, well, if I close that trade now, that money's definitely gone. There's always a chance it can come back, and it can come back. And a lot of times when you're tracing that never happens. So anyone can make money trading. I think the key thing is managing your losses. I think is a big factor. Mark Minervina had a really good tweet about what his trading strategy was the other day, and it was heads I gain $2, tails I lose $1. That was his trading strategy.
Love it.
If you can find that trading strategy, then you're going to make money no matter what. If you've got a 3-to-1 risk to reward ratio, you still could be right a third of the time and you still be profitable. One of the traders I was listening to talking, this guy had started about 10 years ago, and I think he's made almost 7 figures. So I think he's $20-30 million up, and his win rate is only 26%.
Yeah, but when he's right, he's right.
He's right, exactly.
Yeah.
So if you're going to, and then you've got to try and find out what kind of strategy you're going to go for, but you're not going to have an 8-to-1 risk reward ratio if you're going to be trading, 30-40 trades in a day. And so it's finding out what it is that you actually are happy to do. And there are so many different things out there, and all these things that you see on YouTube, all these Twitter feeds, and so I think some traders are even kind of streaming on Twitch as well now, that they've all got their own technique, and it's pointless messaging saying, "Oh, what is it you do?" Or it's pointless copying them. You've got to find something that suits you and something that you believe in, and kind of find your own little edge. And that's what it really comes down to. It's just having that little thing that you do that you believe in, and then if you don't believe in it, as soon as it's not going your way, you're going to break the rules and you're going to think, actually, no, that's not for me. And then you kind of get disheartened by it. So that doesn't work and all this stuff. So yes, that's really important.
Absolutely. I love the term edge as well. And for anybody who doesn't know, that's a bit of trader jargon or lingo. Edge just means your advantage. So if you can, here's a thought experiment I really like. If you go to the casino, you're playing blackjack, All right. You bet the same amount every single time and you keep playing that game. Guess what? The house is going to win because the house makes the rules. The house knows that no matter how many times you win in a row, if you keep playing that game and enough people keep playing that game, it's going to make money because the odds of it winning are 6 out of 10 versus the odds of the punter winning are 4 out of 10. Are you with me? If you
Yeah.
make the rules, you become the house because the house makes the rules. So if you can make the rules, you can structure your trades. You know when to get in, you know when to get out, rather than just letting the markets dictate what's going to happen next and having no plan whatsoever. Then if you can find a set of rules that allow you to be consistently profitable and just apply it over and over and over and over again, yes, some rules will be more profitable than others, but eventually you'll attain financial freedom if you just place enough trades and you keep using the same rules. Really interesting way of thinking about it. I don't know if you've heard that one before. It's actually
Yeah, no, I have.
from okay. Oh, you have. Okay, have you? Did you? Is that what you just said?
Yeah, yeah,
You can
yeah,
tell
yeah.
me what book it's from then as well, can't you?
Was it Van Tharp?
Nah, trading in the zone. Trading in the
Okay,
zone.
okay, yeah. But yeah, that is very true. And like we were saying earlier, win rates on some of these tough guys are 25-30%. So it's not even being right 50% of the time. But it is when you're wrong, you've just got to be emotionally out of that trade. Right, I'm wrong. I've only lost this much. It doesn't matter because and then if you manage your trades, you can be wrong 10 times in a row, but you're not going to blow your account up. You'll blow your account up by being wrong once and then letting it ride and chasing it and doing all sorts. So so that's why kind of nailing down your kind of risk and reward is really important.
Totally. But if you
Yeah,
manage your risk correctly, you should lose no more than 2% of your entire portfolio
yeah,
on any
definitely.
one trade. If you can do that, and if you can put your stop loss in the correct place and also manage something called your position size, which is something that we won't get into too much tonight because it's a little technical, but basically the basic concept is that you don't allocate too much of your money to any one trade. That's the basic concept. But how you do that, the nitty gritty, the ins and outs, that is something that we'll park for now because it's a little more complex than what we've got time for. If you can do those two things for every single trade, then what that means is that you can only lose 2% of your total capital, your total investable capital, the total capital that you have in that account at any one time. That means you can be wrong 35 times and still have half your money. Some people are wrong once on one trade and have half their money, okay? So that's what happens when you don't have correct risk management. But that sounds so crazy from the outside looking in. And that to me, before I started trading, I would have been like, how the heck can you do that? It's about being selective with your trades and also understanding that you shouldn't allocate too much of your capital to any one trade, and also practicing the art of stop losses, which by the way is an art form and it takes time. And it all comes back to what we were saying earlier. Zaid, you touched upon something that I want to talk about at the very start of this podcast, and you said that you're a practicing orthodontist, yet you still manage to trade around your job. How does that look for you? How does that work? How does that fit into your routine?
Yeah. So again, we're quite lucky here because there's actually pre-market trading as well. So the pre-market opens 4 a.m. New York time, which is 9 o'clock our time, and then that's open all the way up until 2:30 when the New York Stock Exchange opens again our time, and then that's open all the way to 9 o'clock in the evening our time. So the two most profitable times or the most volatility that occurs is the first 2 hours of trading and the last hour of trading. So actually the last hour of trading, 8 till 9, there's we're not at work, we can still work during the day and still have that. For me, I like to see what's going to be in place. I look at what's kind of gapped up pre-market during my lunchtime, so between kind of 1 and 2. I look at what's gapped at pre-market. I look at the stocks that might be in play that I might be interested in, and then I've got patients from 2 till 5, sometimes 6 in the evening. And with my job, a lot of my adjustment, if I'm in a longer appointment, they're usually about 45 minutes to an hour. Most adjustments or brace adjustments usually about 15 minutes long. It's normally done within 10 minutes, and we've got a few minutes in between. And that's when I'm kind of looking at what it is. And when I put my trade in, I put my stop loss there and then, and I put it as a range, so I know what my risk and reward is going to be. So I know I can put it in there, and then my stop loss is already in, and then if it hits my target, it will get me out of it as well. So sometimes I'll be doing, if I'm especially long appointments coming in, I can hear the ding on my computer, and the partner's like, well, have I made money or have I lost money? And I kind of don't know until I've gone in and, have I been stopped out or has it reached my price target? So there's that way of doing it. And then what I'm still trying to kind of finalize how I want to kind of what my exact edge is, and kind of toying around with a couple of things. But the other ones, just because it's a day trade, there's different day trades you can do. There's the ones, the scalping that we were saying earlier, where you're in and out within seconds. You're taking lots of little gains and accumulating them. Or there's kind of the all-day faders. The stocks that kind of reach the high of the day, and a lot of them tend to kind of fade over the next sort of couple of hours, and sometimes they kind of bounce back again later on. So those kind of trades, the ones that I do with them, I'm usually kind of in and out of them between kind of half two, more like between kind of 2:45 and 3:15. And then I'm kind of just watching them, have a stop loss in place, and treating my patients. And then I've got a 45-minute drive home. So depending on where it is, I might just take my profit and run with it. Or if it looks like it's going my way, I might lower my stop loss. So if I get stopped out, like a trading stop loss, I'm still made some money, but then give it a chance to kind of go further down if it needs to. And then when I get home, I'll have a look at what's happened with it. So there's that way of doing it. And eventually, I think part of me thinks, actually, if I can get to the point where it's not just that it's profitable for me, it's just something I enjoy doing as well. There's no reason why I can't work a morning and then have the afternoon to sit in front of the computer and do it. But I'm not going to be doing that yet until I've got to the point where I've done my 10,000 hours trading. I've done that, and it just gives you something else up your sleeve. And don't get me wrong, I love my job. I think the difficulty from what I feel is what really appeals to trading is the freedom, is the flexibility. I like the idea of spending 4 months of the winter in somewhere warm. Can't do that with orthodontics, fortunately, but maybe with trading 10, 15 years time, that all you need is your laptop and you go and spend 4 months somewhere sunny. So it's just kind of giving you a different arm and different kind of feather on your cap, if you like. But the journey at the minute, they say all the traders, you start off, you lose money, then you lose less money, then you lose a little bit less money, then you break even, and then you start making money. So the losing money bit at the start really is being at uni. If you think about it, you're losing money, you're not earning, you're spending money on living, but you're learning your trade, and it's not something you pick up overnight. And it's and like I was saying earlier, it's you're putting your 10,000 hours in. 10,000 hours in looking at charts, reading books, doing trades, doing paper trades, trading on a small account. That's 2 to 3 years worth before you get to that point where you actually feel like you can actually go out and do it. And then see what happens after that. But for me, I'm enjoying doing it. I'm only doing it with a small account at the minute. Whether I kind of increase my size depend, and instead of, I've done it wrong, I still hedge my bets, so I still got my investing, I've still got my long-term strategy, I still do a bit of swing trading, but I'm just kind of trying to find, because the thing is, the market is never going to be perfect for the swing trades. The market's never going to be perfect for the long-term investing. So it's having something else that you can do. So my swing trades are breakouts, look at stocks that are kind of in that consolidation period, and then they break out and they go on. So generally they're long based, while generally my day trading is more kind of short biased. So for people that don't know, shorting is when you're kind of making money on the stock going down. So the way it works is you borrow the stock, you sell it at that price. As the price comes down, you buy it again, and then you pocket the difference, basically.
For anyone who didn't understand that, it took me 6 months to understand shorting, so you're not alone, okay? But long story short, it's betting that the stock will go down in price rather than up. Easiest way you can think of it.
Yeah, and for me, the reason I kind of got into the shorting, because I thought, well, whenever I've tried to make money on the stock market before, whenever you talk to all these, everyone wants to talk about stock markets, I always lose money on the stock market. I was thinking, okay, well, everyone loses money because they go long. So surely if I just went short, I'm doing the opposite of that and making money. And so that was kind of my theory. The other thing is, again, it suits my personality because stocks can take a while to go up, but they tend to go down very quickly. So again, for the impatient side of me, I think that suits my personality from that point of view. But it is riskier, because if a stock, for example, if a stock is trading at $7 and you go long and you buy that stock at $7, the most you can lose, well, that stock can go down to zero. So the most you can lose is whatever you've put into that account, into that stock. Now the problem is with shorting it, that stock can go from $7 to 10 to 15 to 20. There is no limit of where it can go, so it can blow up your account quite quickly, which is why you've got to be really on it with your stop losses. So yeah, it's not for everyone, and that's why it's like you've got to find your own kind of niche. But for me, it makes sense because I'm going long in my swing trades and I'm shorting in my day trade. So if my day trades aren't working, generally my swing trades might be working. I'm kind of hedging my positions really, regarding that. So yeah, so for me, so fitting it in during the morning between patients, I'll look at charts and look at what my swing positions may be, if there's anything that looks like it's taking my fancy. And I might see what stocks I want to play that afternoon. But yeah, there are times though when I'm kind of in a trade and seeing a patient that's making money. I finally see that patient, go back onto the computer, write the notes, look at it and go, oh, I've missed my point. So that can be a bit frustrating sometimes, but and actually then, but it's a learning curve. Like, so I'm doing this to learn, because okay, at least I know, well, that's what I would have done then. I was right at that point, may have not made the money I wanted to, but I can take that going forward as a kind of like okay, well, it was a win, but maybe not as much as a win as it should have been. But that can also work as an advantage, because the biggest problem that some day traders do is you overtrade. You're sitting there idle, nothing happening, so you kind of just go into trade just for the hell of going into a trade. So actually being busy with patience sometimes helps you out, because you're not overtrading or overthinking. And there have been a couple of times when I've gone into trades and it seemed like I was hitting my target, and I thought, I'll take my money now, and hadn't quite got round to it, and my nurse brings the patient in and starts seeing the patient, and the patient leaves, and then I go back onto it and go, oh, brilliant, it's actually gone down further than I would have, sorry, I was shorting it, so it went down so I made more money. It's a good job that she brought that patient at that time. So it kind of helps you in just having an idle hands instead of just sitting there going, right, I should be doing something now. So again, fitting it in for me works quite well. So yeah, so I think it's and especially less of an issue now, but I think when Den's had all these fallow times and stuff like that, there's a chance to try and do something in between. But but for me, that's how I kind of manage it in, fit it in.
Making it work, using your time as effectively as possible. Got fallow time. Maybe this is something that, and the thing about trading is you can just pick it up and you can do it anytime you like. Even if you're not entering trades, you're looking at charts, and it's all contributing towards those 10,000 hours that you spoke about earlier. Zaid, I am absolutely loving listening to you talk. So many gems in there for everybody who's listening. I am super conscious that we want to keep this podcast tangible to about 40-50 minutes ish, and we had so many burning questions on the group when you posted earlier about this podcast. So let's go ahead and jump straight into those. And these responses are Zaid's pearls of wisdom, which Zaid has actually come prepared. He's wielding a piece of paper in front of himself there, which
I am. I wrote the questions that were asked on the thread.
And you know what? What a travesty it would be if we weren't able to cover all that. We weren't able to. All that effort was wasted, I suppose, is the best way I can put it. Awesome. Let me just jump onto the questions here on the group. So. I am looking for the post as we speak. Here we are. Okay, cool. So we've got a question here about bots, pros and cons of trading bots. They sound so simple.
Yeah, so I think
use.
So for bots, I think the pros of the bots, I think if bots will stick to your stop losses. I think the way to think about it is we have to trade like a bot. That a bot will do exactly what it's programmed to do. It's always going to follow that risk and reward. And as humans, we get emotional with the money on the screen. However, I think the biggest issue with the bots is that you're competing against these hedge funds that have these high frequency trading algorithms, and these guys have pumped millions of pounds into it, and unless you're very, very technically minded, I don't think it's something for the retail trader. And you've got to factor in every eventuality that happens into your program. If this happens, and you've got to do this, and you've got to do that. And not only have you got to be a good trader, you've got to be a good programmer. So you've got to be able to do both things and factor that in. So for me, I think it's far too much effort to make profitable. And actually, I was listening to another podcast that was talking about a guy who programmed these bots, and it had this algorithm that was kind of set in play. And within 7 seconds, because it slightly malfunctioned, there's something he didn't account for. In 7 seconds, it burnt through his account because of doing all these frequent trades. And then he was kind of watching it happening in front of his. And then the only way he can stop it happening is he pulled the plug on his computer. And if he hadn't have pulled it in time, his account would have been fully wiped out. So you've got, and even though it's there doing its job, you've still got to monitor it. You've still got to factor it. I think one way that may be beneficial is, especially with like machine learning, for example. So if you can get a bot that kind of learns the mistakes it's made or learns from that side of it, but that is completely beyond and over my head regarding that. But I think my biggest view is you're competing against the other bots that are there. A lot of these bots are programmed by these big algorithms, and these firms are doing such quick trades that are happening. It's just not worth competing with on that level. But I think the way what to take from that is trade like a bot yourself. Stick to your stop losses, stick to your risk and rewards. And I think that's probably the best way forward regarding that.
I think if it sounds too good to be true, it probably is. Just like these magic indicators that you see advertisements for, where there's some supposed gift from heaven, unbelievable indicator that someone has created that's cracked every single market known to man and can make you unlimited money. It sounds too good to be true, and that's because it is. And if everybody was using that indicator, if it was that simple, everyone would be using it, in my opinion. Awesome. Next question. Is successful day trading a skill or purely luck?
Yeah, I think it's quite an interesting question. As we kind of touched on earlier, it's a skill in the sense that you need your 10,000 hours to put in like anything else. If anything, going to the casino, doing all that stuff, that's kind of luck based, but it's managing your luck. So if you're lucky in your trade, then you're making money, and if you're unlucky, you're just losing that little bit of money. I think that's kind of the thing to take away from that. And you're going into a trade, there's going to be one or two things that's going to happen. It's either going to go up or it's going to go down, and it's just finding a way that, okay, well, if it goes against me, I'm only going to lose such a small amount, and if it goes for me, I'm going to make more than what it's going to go against me. So I think there's definitely a skill. You wouldn't have professional traders, you wouldn't have these hedge funds, you wouldn't have all these big companies making money from it if it was purely luck. But I think getting the right edge for you tips the balance in your favor and makes it maybe a bit of luck in the sense of finding what that edge is, but it's definitely skill involved in that.
It's like poker. There's always going to be chance, but the better you are at poker, then the more likely you are to win, and the more that chance is reduced. I love that. Is it Tiger Woods who said, I love people who call me lucky. I've always noticed the more I practice, the luckier I get.
Yeah.
Love that quote.
Yeah.
Does that encapsulate what you were saying, or would you like to chuck some more on top?
Yeah, no, I completely agree with you. And I think the other skill that you need from that is the psychology. I mean, a lot of trading books, any big trading book you'll pick up has a big section on psychology, and so much of it is psychological based. So it's really, definitely a skill, which I'd love to master one day.
I'm sure you'll get there, my friend. And then the second part of that question was, and if it is a skill, how do we develop this, educate ourselves about becoming successful at this? We kind of half covered this, but maybe you'd just like to summarize some pointers that people can look for.
Yeah, so I think if you're going to start anywhere, I think books is a good place to start. First of all, you just need to have a general kind of guide into the stock market in general, and then once you've kind of got that side of it, a lot of those books, trading books, will talk about risk and reward. We'll talk about psychology. We talk about, we saying earlier, about position sizing. And these are all kind of giving you the basics, the foundations of what you need. And then it kind of goes up. The next level up is looking at kind of technical analysis books, on looking at these patterns. And so that's the next step up. And to be fair, you only really need kind of one or two things that you look at. You don't have to learn all of them. You find something that you think, actually, I'm going to nail this, and this is the one I'm only going to be looking at a certain technical analysis, whether it's a double top or a double bottom, or kind of pivot points or breakout from contraction patterns. You just got to kind of nail one or two of them and kind of just become an expert in those, the ones that make the most sense to you, the ones that feel like it's most natural to you. And that then becomes your edge of what you're looking for. And then once you've done that, then kind of looking at charts and backdating it. So, a lot of charts now, you can kind of go back, so you're not seeing what happens later on, and then you can go step by step. Okay, what would I have done here? I think it had gone up, and then you do the next slide along. Oh yeah, it did go up, it went up this much, and then you can kind of almost test yourself on that and see how you're getting, and then go into kind of paper trading, because then it becomes a bit more real, and getting used to kind of buying, selling, where to put your position size, and then I think then starting an account with a small account. So if you've got, I don't know, £10,000 to put into it, I'd only open an account with £5,000, because you're going to blow up at some point. At least you've got another 5,000 to kind of go. You'd learn that lesson from then. You've got another £5,000 to put into it, but position size really small, and then it gets you used to kind of finding liquidity in certain things. So you may not be able to hit your stop loss every time, or hit your entry point every time, because some stocks move very, very quickly. And then you can kind of, once you've kind of mastered that, then you've got all these kind of hotkeys that you can do, where you're buying in and out of trades really, really quickly. And again, depending on the type of trader that you want to be, but it's kind of finding your edge. But you can't do any of that if you don't know. You can have the best edge in the world, but if you've got a sloppy risk reward, you've got a sloppy stop loss, you're not going to make money. So that's kind of, it's oh, how do you do this, or watching. And that's why you're watching all these YouTube videos and all this stuff. Yes, good as an idea or as a bit of research, but you've got to find out then, okay, well, what would I have done in that place, and not become emotional about it, and sticking to your own rules is the key thing. So I think that is the most important thing, first of all, nailing that, and then it doesn't matter what edge you have, because every edge has the opposite edge, if that makes sense. So if you're looking at someone that goes, okay, well, I'm going to trade off bouncing off some support level. So this stock has never reached more than $15 in the last, I don't know, 3 months. So every time it hits $15, well, I'm going to bank that it's going to bounce off that, and I'm going to short it, and it's going to come down, and I'll make money. But at some point, that stock is going to break $15. And when it does, there is no limit to where it's going to go to, because it hasn't hit that mark before. So then the simple way you manage your stop loss, okay, well, it's coming up to $15. It's never broken above $15. So I'm going to put my stop loss at $15.50. Because if it hits $15.50, there's nothing stopping it hitting 16 or 17 or 18, because it's never done that before. So that's kind of one way of how you manage your stop loss. And then there'll be other traders that go, okay, well, this is hitting its peak, it's contracting, and I think, once it breaks $15, I'm going to go long, and it's going to make loads of money. But then if it drops back down to $14, then I know it's not going to do it on that time, and I've only lost that $1 per share. So you've got two traders looking for two opposite things, and yet both can still make money depending on the outcome of it. So there is no edge that is correct, that works every time. It's how you manage whether you've got it right or not is the key thing.
Totally. And what was that famous investor called? Jesse. You're going to have to help me out. What did you say?
Jesse Livermore?
Yeah,
Jesse
that's the
Livermore.
one. Jesse Livermore. He has a quote that goes along the lines of, I've never met anybody who got rich off trading other people's suggestions or other people's calls. Yeah. And the reason that he says that is, you can have a brilliant call, you can trade it terribly and make no money. That's the crazy thing. That's the crazy paradox. Everybody thinks it's about picking the right stocks. It's actually about managing your risk, getting stocks that somewhat do well, but then executing your trades extremely well and managing your portfolio. There you go. Knowledge bomb right there. But
Exactly. And
what that means, that takes that all of those little components to what I just said are actually a lot of research to flesh out and understand, and they're all concepts in itself, and that's when the work comes in.
yeah, and I can even tell you, if I told you, right, this stock is at $15, it's going to go to $17, and you buy it at 15, it doesn't go straight to 17. It might drop to 14.50, and it might go up a little bit, and then as soon as it drops down to kind of 14, you think, I don't believe him. It's not going to go up to 4. It's not going to go up to 17. It's dropped to 14. You sell at a loss, and then it shoots up to 17 because you didn't have that conviction in your own view. So therefore, you can't be committed to it. So again, that's why it's really important to kind of have your own, nothing. If you learn nothing from today's podcast, it's find your own edge and be committed to your own edge.
Cool. Awesome. Do you know what? I feel like we could just talk about trading all night, Zed. Zed, I am looking for more questions on the post in the group. I can't see any. Was there any more that you had written down there?
Yeah, there was one on options trading. I don't do any options trading. The thing that I am looking at though is so for options, what people don't know is you kind of you go into a contract where you buy or sell a share at a strike price. So if it hits that price, you can then buy it or sell it, and you make money. And if it doesn't hit that price, all you've lost is the premium to go into that contract. So one of the things that I'm kind of toying with and looking at, and I think where options can work quite well, is, for example, if you've got an account where you're looking at investing and you're looking at these top stocks, and you think, okay, at some point I want to buy Apple shares. Apple shares at the minute, I don't know if they're, is it $180 a share? I think I can't remember exactly, roughly that mark. But you think, oh, this kind of hitting a bit of a peak. I want to buy it at its dip. With options, you can put a put option to sell Apple shares at, say, $165. So you'd make premium on that. But if it does ever hit $165, you would have to then cover that and buy those Apple shares at $165. But if you're planning on buying and keeping those Apple shares at $165 anyway, then you kind of made money both ways. Does that make sense? So options trading itself is quite niche, and it's quite difficult to get your head around sometimes. But for me, I think it could be quite a way to use it if you're kind of planning to go and buy that share anyway. But you can make money along the way while you're waiting for it to hit that target by collecting the premiums of those potential failed strike points on the contract. But again, there's loads of videos on actual options trading itself and all sorts, but it's not something that I particularly delve into.
I'm just boring, steady Eddie spot trader, me personally. And you know what? That's the thing. I say boring, but you can be incredibly profitable by trading spot. Again, I feel like it's one of those things that people associate the fact that it's more elaborate with the fact that it's consistently more profitable, or at least they entwine those two when it doesn't necessarily have to be the case. And you know what? Straight up spot trading, just buying crypto, buying straight up normal crypto, or buying straight up stocks or whatever, that can be very profitable if you know what you're doing. You don't even have to dabble in this more fancy stuff. But yeah,
Completely.
it's out there. It's not something I particularly do either. You were going to say something else, Sid?
I was just going to say, you can talk to some of the best traders in the world, and they will not have a clue what an options trade is, because that's not their niche. Their niche is this one particular edge, this one particular setup, and they make thousands, if not millions of pounds from this. So they don't need to know anything about options trading. You don't want to be a jack of all trades where you do a bit of this and you do a bit of that and you do a bit of this. You kind of want to kind of focus on one thing and do that well, whether it's crypto, whether it's forex, whether it's equities or anything else. And
Totally.
yeah, I think when you try and spread yourself too thin, I think that's when you can cause problem. It's a lot to learn.
Mastering it, because the more you master it, the more of an edge you have on everyone else.
Exactly.
What do you understand about it, you know? And that comes through just focusing on one thing. And it is the depth to each asset is insane. It's like you being an orthodontist and saying, actually, I'll have a crack at all on four. It's not going to work. You know what I mean?
Yeah,
You
yeah,
have to.
exactly.
It's almost like you have some translatable skills, but you still have to start from the start and build your way up. Start doing single tooth, multiple teeth bridges, then all on four, something like that.
Yeah, no, completely agree.
Put it in dental terms. If we put it in dental terms, it's super tangible, then everyone gets it, you know? And
Yeah, yeah, yeah,
that's
exactly.
why I can explain it. Zaid,
Eh,
it has been brilliant tonight. So many knowledge bombs, so many gems. Anything that you'd like to say to wrap things up?
No, I think we've covered most things without trying, without over repeating certain points. But yeah, I think it's I enjoy it. I enjoy doing it. It works for me. It may not work for everyone, but it's finding what your personality is and finding what it is you would find interesting, be committed to doing. And for me, it just happens to be day trading, and there's loads of different options out there for different folks. So yeah.
Cool, man. Thank you so much to yourself, Zaid, for giving up your free time. Very kind of you. And it isn't the first time either. We look forward to having you back on the podcast at some point, my friend. Absolutely tremendous. We shall speak very soon.
Thank you, James. Yeah, keep up the good work.
Thank you, man. Bye bye.